Morning traders, and welcome to Phoenix Blue's morning update on Thursday the 11th of August. Hope you're well today on this slightly windy and cold London morning. My name is Nishal Patel. As I said, I'm going to be taking you through the markets for today. Just giving you a brief synopsis of what's transpired yesterday and what we should look for today in the up and coming news events. And in particular, how we're looking to tackle a few of the markets. So, just starting with the news events, we can see that today there's a bank holiday in Japan, which will probably dull down liquidity. Liquidity has been fairly low this week. A lot has been said in regards to it. I think more than anything else, the US dollar has been flat predominantly. We saw a lack or a void of liquidity on Monday. Saw bursts of it come in on the Tuesday, but realistically, with NFP on Friday and such strong data coming out from the States side, we really saw a strengthening of the USD. That had a knock-on effect onto the rest of the markets leading into the Monday because it's almost like a market correction effectively. USD's pulled back. We have since lost ground on the USD, so the USD has devaluated over the course of the last 4 days. So it's coming up to a full week almost since NFP, and that's obviously had a knock-on effect to the rest of the marketplace. But a fair amount has transpired last night. The next news announcement we've got, or we've had already, I should say, is from the Royal Bank of New Zealand. Now, there was an announcement yesterday, and effectively the bank or the central bank in New Zealand has cut the rate by 25 basis points, so 0.25%. That was widely expected. The markets have been factoring it in. We're going to take a look at that chart in a moment. We have unemployment claims coming out stateside at 1:30 GMT or BST, I should say. And we've got a retail sales announcement on the Kiwi again later on this evening. So let's head straight to our charts and then we can see what the impact of that has been. So right now we're just going to have a quick look at the euro. Right now the euro is floating on this daily time frame at 1.1394, has retreated from that high that we saw yesterday. Obviously, as I said, initially we had seen the dollar weaken up, and that's really very evident on this daily time frame on the euro. Let's note that the euro has been stuck within this quite a broad range over the last month, and has come up and hit this high over on towards the tail end of the week previous, and had now created what seems to be a lower high effectively, which is good news. Price action has tumbled below that 200-100 moving average, so large moving averages there, and is currently sitting on the 50 moving average. Potentially, if we do see any kind of strength right now, then what we will see most certainly is this carry on going short. And for the fact that we are seeing a lower high on this is a good sign. Moving on to the big one, I think what we should be looking at is the Kiwi and that huge bar. This is a 30-minute time frame. That huge bar obviously reflects what happened last night when we did have the cut. So we saw this huge spike, and then price action has pulled back and corrected itself. There is Kiwi pulling back, right, currently sitting at 0.7237 circa. Has come off that high, as I said, set by the announcement, and has pulled back sufficiently. Potentially, what we will have to see is we'll have to see what the USD does today and again tomorrow. There is a lot of onus on the USD and see how that is performing, and a knock-on effect to the rest of the market. Let's remember, and I've already stated this, that this cut in rates of 25 basis points has been factored into the market and has been factored in for some time. Are we going to see a drastic change on the Kiwi? Probably not. So probably carry on trading it the same way you have done. Let's not forget, we've been looking to trade this over the last few months, on and off on bust. It looks like a potentially a good trade. As we can see, it's been trending beautifully from last year. Has had a few blips, but I guess all currencies have. Now, over to the next main topic. I'm just going to flick straight over to WTI. We can see these huge spikes, but just moving over to a 4-hourly chart, just so we can see a little more data. Apologies about the screen being slightly congested with levels of support and resistance, as well as fib levels and trend lines. But right now, what we can see is WTI has finally dropped back down below that 42 level, coming down in even bursts. It's something we have been looking to trade. Predominantly yesterday, I would say, more than anything else, yesterday, given it the push over the edge again. We did have OPEC earlier on in the week stating that they're going to have a meeting or in a month, looking at potentially freezing output levels. But let's not forget, this has been in the making, or has been discussed, in particularly by OPEC and its incumbent member states or countries, for some time, and they have failed to reach agreements on output. But initially, that driven the price of oil up, as we can see by the momentum on our chart right now, and right now it's dropping again. Just before I carry on and discuss how stockpiles were again high from the States, and they were considerably high. I think it's shocked a few people how high the stockpiles were, but definitely having a huge domino effect onto the markets, because the price has come tumbling down straight afterwards, as we've seen on most Wednesdays, and a reflection straight onto the Thursday. But earlier on in the week, we have to remember that there are a lot of oil producing states out there globally. We're not just talking OPEC right now, that are nowhere near normal output levels. In particularly a few oil producing countries in Africa, Nigeria being one of them. They're nowhere near producing normal output levels. Again, Iran are nowhere near their output levels prior to their sanctions being lifted. So again, in terms of supply and demand, if they were anywhere close to it, then we would see a huge drastic fall again, a further decline in the price of oil. But that being said, they're trying to reach agreement, and that had caused a mini rally, as we can see on our chart, and price action did steadily go up, breaking that 43 mark, and since then has tumbling back down. Probably expect it to considerably get closer to the $40 a barrel, and potentially break it into the 39s, if the USD acts accordingly. Let's not forget the USD is having a knock-on effect to a lot of the commodities as well. So just moving on really swiftly, going over to cable right now. Cable right now again has been falling short. I've been trading it short since this level 1.3025. Initially had made an intraday trade earlier in the week, and then again have taken another position. We can see this beautiful intersection of the moving averages and a intermediate level of support and resistance, and is doing really well. Now, guys, I hope this morning update has helped and given you a brief understanding of what we should be looking for today. Let's not forget that there is data coming out US stateside today, and we do have data coming out tomorrow on the states. That's obviously going to give us a benchmark on the health of the economy out stateside. We have had enough data out for us to be able to call a potential strengthening in the US. One thing we haven't discussed is the Chinese yuan and their strengthening. That the Chinese government have allowed for the strengthening of their local currency today, because it does mark the 1 year anniversary since they had meddled with it and created a limit. So we are seeing some strength out in Asia, but predominantly not too good. Anyway, guys, until next time, I hope you've enjoyed it today. I look forward to speaking to you all soon. Take care. Bye bye.